And I lost the screen with it on there.
Oh
Welcome in,
no.
welcome in, everybody. This is Beyond the Charts, and I'm the Crypto Bull God. And in today's edition, we have Alex from Tactical Invest to talk about Kaspa and many, many more exciting opportunities within the cryptocurrency space. What we're looking to do on this brand new live stream here, what we're trying to accomplish is to take the fundamental aspect and the technical aspect of investing, combine them, find where some synergies exist, and then ask the question what we can learn from one another as well. So with that being said, I did want to give a brief introduction to Alex here. He has, which I am re-pulling up again. I apologize, Alex, but
You're good. You're
these
good.
are the wonderful things about doing doing a live stream. But Alex, you can find him. I'm just going to pop over my screen here, Alex. You can't see this, but you can find him on Twitter or X. You can also find him on YouTube, and he also has fraction mining, which he can tell you a little bit about. Take it away.
Awesome. I appreciate the intro there, CBG. When you reached out originally, as you know, I'm not a TA guy. So when you reached out, I was like, finally, I get to talk to someone who is a diehard TA guy, because everyone has kind of their own approach to cryptocurrency projects, and mine, like you mentioned, a little bit more fundamental based, and yours is a lot more TA in mathematics, if you will.
Right.
But yeah, dude, for a lot of people that maybe not know me from your channel, I'm known as Tactical Investing on YouTube, known as Alexander in real world, and kind of have a lot of things going, both from Twitter, both from YouTube, and then crypto mining company Fraction Mining. So more than happy to divulge into all three of those. Which one do you want to briefly introduce first?
I would love to get into the fraction mining.
Okay. Yeah. So I originally, so as one of the things that a lot of people know on my YouTube channel, I've been in the mining space for a long time. Back with really started mining with Ethereum. So first started off with GPUs, moved from GPUs to a little bit of CPUs, and then moved into ASICs. And so one of the things that I always saw in the industry was the difficulty of a lot of people getting into mining. And a lot of that was the barriers to entry. So a lot of that was whether they live in an apartment, they don't have 240-volt outlet to plug in an ASIC, so they're stuck with GPUs and not everything GPU mineable. If they're in a situation where they don't have 240 volts to be able to run an ASIC, as most are run on 240, then you're kind of out of luck there as well. And then obviously in some situations you've got noise limitations. So like if you're in an apartment in downtown Miami, well, you're not going to run your ASIC in an apartment complex. So
Right.
all of those barriers to entry really left two solutions, right? You either buy and host with a supplier. Compass mining was extremely popular in 2020, 2021. But then Bitcoin miners are also costing like 10 grand, right? So those same miners are now selling for like $1,000. So the barrier to entry for a lot of people is also the cost. So a lot of people looking to get into the mining cryptocurrency, whether that's Bitcoin or not, had a lot of those barriers. So if you couldn't buy and afford a miner, then your all only other option was buying through like a third party to buy a specific amount of hash rate. So it's like hash rate contracts, and a lot of those companies were extremely sketchy, and a lot of people lost a lot of money when it
Mm.
comes to buying a certain amount of hash rate for 3 months. A lot of people got scammed that way, so there really was no true solution. And so I was like, well, why don't we fractionalize Bitcoin miners or crypto miners in general? So that's kind of where the name came about, fraction mining. So originally we started with Bitcoin, we moved into Cadena, and then moved into Caspa. We've had a bit of struggle on the infrastructure side of things, which we've had every startup, every company is always going to have its struggles. Is certain things that um, can derail temporarily as you build. And so one of those things that we always focused on was vertically scaled, which I think is extremely important, where you own all aspects of the operation. And now we've pivoted. We just purchased 10 acres on a property. we've got energy capacity, we've got containers, everything like that. So we're kind
Wow,
of
nice.
moving in the right direction. But that's essentially the whole goal was breaking down the barriers to mining crypto, where crypto mining is available to anyone, anywhere, at any time. And that's kind of how we started off. That's how we're progressing. Casp has been a huge part of that. We'll talk about that later on in the stream. But we've now started to grow outside of just the fractionalization of mining, but also into the hosting. And then we'll have an e-commerce platform launching soon. So a lot of exciting things coming for fraction mining, but that's kind of a brief history.
I mean, extremely innovative. It was one of the things that when you shared that on your YouTube channels, it was one of the things that caught my attention personally. And just listening to you explain in the level of detail that you're explaining, clearly you've been in this space for a long time.
Yeah, I mean, mining not as long as I've been into crypto. I've been in crypto since 2017. So me and my buddy got into it back, that's 7 years ago now. So I haven't been in as long as some. There are some blue hairs, if you will, in the industry
Hmm.
since 2012, 2013. But it's one of those things that I've been through a couple of cycles. I know kind of how industry works. It's one of the reasons why when I started the company, it was in that November, December of 2022. So Bitcoin at that time was at 17, starting before January 17, 5 or so. So from a timing perspective, could have started the company at a better time. And one of the reasons why we've been successful.
Excellent. Yeah, and I know, and I really appreciate you coming on the live stream. Like I said, I really appreciate your content on YouTube. And the thing that struck me about the content that you produce, you're very meticulous about explaining what it is you're explaining. You explain it in an easily digestible form, but it's very evident to me that you're very good. And I consider myself somebody who knows a lot of the fundamentals, but when I listen to you speak about certain projects, I'm like, this guy really knows what he's talking about, and I would love to pick his brain a little bit. And like I said, I can appreciate this perspective. I can totally appreciate this perspective that like TA just isn't your thing, right? Like it's just not,
Right.
for certain reasons you can share. It's just not your thing. You're not an expert at TA, and so it's a great opportunity for two people who are passionate about the space to see, what things, what again, synergies, and what things can we learn from each other. So, um,
Yeah.
just a very brief intro on myself. I too have been in this space for a while. I started really researching cryptocurrencies in the summer of 2017. Put my first dollars invested in 2018. So I've had skin in the game for quite a bit of time.
Right.
And sort of my background, if you will, in my professional background, I'm an actuary. Specifically, I do a lot of pricing work for insurance companies. So I'm a mathematics guy. That is who I am at
Right.
heart. And it's funny how life works out. Actually, I got done getting credentialed, being an actuary, and I essentially was working two full time jobs while I was doing that. I was just so busy studying for exams and working, and I needed something to occupy my brain because working 40 hours a week just was not enough. That's what
Right.
got me into technical analysis. So I've been doing TA. I took some formal classes on it since 2016, and then came my introduction into crypto. And so I have found the two have paired very well. That I've been able to, and we'll get into some of this, how I've been able to use technical analysis to benefit my investment strategy, because I'm not, as I've shared, I'm not a day trader. I am not a day trader. That's not what that's not what I do. But I do use technical analysis to benefit my investment philosophy, which we can definitely get into. So specifically, talking about Kaspa, how long have you been involved with the project, and what got you really interested? Because I know you're quite passionate about it.
Yeah. So I got into Caspa in September of 2021, I believe.
Okay.
So Caspa, and I'll have to look at the all time. I think it was September of 2022 actually, is when I got into Caspa. The years run all together with the crypto space, but um, that was when Ethereum was moving from proof of work to proof of stake, which I still think was the Nothing has changed for Ethereum after that move. Yes, they've had a few upgrades, but in the end, Ethereum is still. You look at the gas fees on Ethereum; it's ridiculous.
Yep.
Um, and so for me, it was okay. I had 32 GPUs at that point. I had 3 giga hash of hash rate on Ethereum, and so at that point, I said, well, I need to start looking at other opportunities when it comes to proof of work because I need these GPUs running on something. And so at that time, there was a lot of cryptocurrencies that were popping off, that were getting some notoriety because a lot of people were already starting to move their GPUs off of Ethereum and looking at some other cryptocurrencies. You saw Ravencoin, you saw
Yep.
Flux, you saw, Ergo. You saw a ton of them popping up, and then new ones coming online that a lot of people were hyping out, whether they were spec mining it, whatever it might have been. So at that time, I had run across Kaspa. I don't remember what exactly had me run across it, but I remember looking at Kaspa and I said, okay, so this is extremely interesting. And for me, when you see a lot of other cryptocurrency projects, Kaspa, in a lot of ways at that time, wasn't overly hyped. And typically, your quality projects don't get a lot of hype all up front. And so Caspa was somewhat under the radar. I started doing a bit of research onto it, and one of my friends, son of a tech, who's also a YouTuber, had been
I'm
involved in
subscribed to his.
Caspa.
Yeah, I'm subscribed to his
Yep,
channel as
yeah,
well.
yeah. Had been mining Caspa longer than I had. He'd been in about 6 months earlier than I did.
Hmm.
But it was at that point I was looking at Caspa and I say the technology potential of Caspa was really impressive. And then I started doing research into the team and who was behind Caspa, and that's really what drew me in. Now, at that time, when I took all of my GPUs from mining Ethereum to mining Caspa, this was right before the last day you can mine Ethereum. I started mining Caspa probably 2 or 3 weeks before Ethereum officially transferred over. And at that point, I wasn't making anything. I was actually it cost me more to mine Caspa than the profits that I did from mining Caspa. That's
Hmm.
how crazy it was at that time because Caspa at that point was 2/10 of a penny, and so the price action there didn't validate the amazingness or anything that Caspa could bring to the table. So initially, it was like, hey, I need to move my GPUs to somewhere, and Caspa looks like it has a lot of potential. And it wasn't. There was a lot more other more profitable cryptocurrencies to mine that I actually could have made money after my electric cost. But with Caspa, I was actually losing about $5 a day or so in electricity cost um, compared to like if I had sold it at that time when I was mining it. So that was kind of my initial introduction to Caspa.
So that just to
And
pause you there, it sounds like you made a decision um, for some upfront, shorter term, immediate losses, if you want to look at it that way from electricity standpoint, what you just shared. But the reason, if I'm understanding you correctly, the reason that you felt convicted in doing that was you had a longer term vision in terms of what the project based on the team and also the white paper, what the potential was there.
yeah, and that's oftentimes, when you look at a lot of guys involved in proof of work, and the perspective a lot of times where people fail in the perspective of proof of work is they don't look at the perspective, or a lot of times they look at the perspective of how much money can I get, right? They give a price. Uh, they're so focused on the price of the underlying cryptocurrency
Mm-hmm.
that if it doesn't make them $20 a day in that cryptocurrency, they're not interested. But rather, what the interest should be is the 20,000 tokens that they get and the potential valuation of those tokens to be in 6 months, 6 years. So that's where oftentimes a lot of people fail is not the dollar value of the underlying asset you can get every day, but the amount of tokens you could get every day. For example, back then I was getting about 3,000 Caspa per day off of my
Wow.
uh, 3 giga hash farm, right?
Very
And
nice.
you look back at that, you look at where that is today
Yeah.
at 13 cents. I can't even do I can't do the math. You should be able to do math, but like you do
Thirty
the
nine
math,
hundred
right?
dollars. Yeah.
Yeah. So well, $390, right? Because a tenth of that, right? If we're saying Caspa's 10 cents, 3,000, that'd be
Oh
$300
yeah,
a day,
I
right?
am good with math, by the
So,
way.
so like
Quick
you
math on
look
the
back
spot.
at it, right?
Yeah.
So like you look at that, and if I only had the mindset of like, oh, I'm losing $5 a day, fast forward a year and a half, I'm making a six-figure income every single day. Yeah, but if you only focused on like, "Oh crap, I'm losing $5 a day. This isn't worth it. I'm gonna go to do something else." Like if you look at it from that mindset, which a lot of people do, and that's why a lot of people don't stick around with proof of work, you're never gonna be successful. So that's why you stick to your conviction, and you see where that's gone, right?
Yeah, and that makes a whole lot of sense. So, and it kind of leads into, and we're going to get into some technical analysis as well here, which I know you're anxious to get into. But what are just from a generality perspective, because you and I do share um, a similarity in terms of our passion for the project, and I can get in and share why as well from a fundamental perspective, as well as a technical analysis perspective. But just in generalities, because as a chartist, right, as a chartist, um, it's very it's more nuanced than this, but it's very simple in many senses for me to look at a chart and find a chart attractive or not attractive, right? And I can point out the reasons why. So I can just black and white look at a chart and tell you, well, that looks like, and I'll do this routinely on my live stream, all in the charts. When people come on Tuesdays and Thursdays, I do what's called TA Q&A. And during the TA Q&A, people will give me whatever chart they want, and I'll put it up on the screen. I'll chart it for them and tell them what I see. And quite often, there's a time or two where I get a dumpster fire, and I tell people I don't know what this project is, but I wouldn't touch it because of X, Y, and Z.
Yeah.
And then there are charts that people have had me pull up that look absolutely astonishing, and I'll consider either looking into the project to see, read about the fundamentals, or just take a trade in it, based on what the chart
Right.
looks like. But it's different purely coming at it from a fundamental perspective. So, what are some of the core things that you consider when you're taking a look at a project?
Yeah, I think there's in every fundamental aspect that you look at is going to be weighted differently depending on who you're talking to, right? So for someone that that looks at things from a fundamental perspective, and their big thing is um, the tokenomics, right? Some people really, really harp on tokenomics to a overstanding amount, right? In a lot of ways, when you compare it to the likes of, even if you look at Bitcoin, right? People look at the halvening, and everyone relies on the halvening so much based on their fundamental, because they look at it from a supply and demand, right? So supply and demand is always important because that's always going to directly impact the price action of an underlying asset. So for me, when I look at a cryptocurrency, when I looked at Kaspa, tokenomics was going to be a substantial portion of how I perceive the project, right? So you look at Kaspa's tokenomics, there's a limited supply, there's a reduction in rewards, and there's a supply and demand that is four times greater than the halvening impact of Bitcoin. So you look at something like that, and you say, okay, Bitcoin was extremely successful doing this. How will Caspa do in a tokenomics that is significantly four times greater in its halvening cycle than the likes of Bitcoin? So tokenomics is really important. The team behind a project or lack thereof. A lot of times, if there's a lot of times people in the crypto space will like, oh, the team's anonymous, I'm not getting involved. Well, Bitcoin, right? The biggest cryptocurrency has a anonymous founder, and people make that like, well, that's just Bitcoin, but then you have all these projects. So like everyone has this weight of ideas, like, well, if the team, but oftentimes even if there is a docs team, projects go under, right? So you can't rely on that all too much, but there are some weights, if you will, on the team. You can see the likes of Caspa's team. You look at the developers, the contributors, very, very impressive, and they're extremely knowledgeable in what they do and in their background in the crypto industry as a whole. That's kind of like the second thing. And then lastly, when you look at a project, is it filling a need in the industry?
Mm.
And that's why for me, I love AI. I love the decentralized computing. I love the opportunity that brings to the table because it fills a need in the industry, right? Does your next meme coin fill a need? Well, probably not. Is there some potential upside in it? Probably. But it's not going to be something that I'm holding because of the fundamentals, right? So fundamentals of Kaspa, you can see the transaction speed. You can see that compared multiple videos where you can see how fast Kaspa is in its transaction speeds. The fees are extremely minimal. And then you look at the focus that they have in increasing not the transactions per second, but rather blocks per second, which I think is extremely impressive. And it's been proven and it's being tested and it's getting onboarded. So there's all different aspects. And you look at those just three, one person may weigh tokenomics as like 75%. Everything else not as important, but tokenomics have to be great. And then you're going to have others that are like, well, it's all equal between the three. But for me, I think every perspective is a little bit different. For me, team isn't as important. I think the experience of the team is important. I think that's probably going to be the number one. Look at the hole, if you will, or the gap that they're filling in the industry to be number two. And then tokenomics, while it's important, every project has its own unique approach to tokenomics, but tokenomics would rank number three. All three of those are what Kaspa has and what will make Kaspa successful.
Yeah, it sounds very logical and methodical the way you're breaking it down, which I like. I can appreciate being a data guy. Do you,
Right?
when you're evaluating a project or just in generalities, do you have sort of a preference in terms of what you, and I can share with you what my own personal, what's near and dear to my heart, proof of work versus proof of stake. So for me, proof of work, there's just something about mining a project, a cryptocurrency, that aspect of mining, and what I believe results in an increased likelihood of decentralization over proof of stake. My heart is with proof of work all the way. That's just for me what feels right based on the technology. What would you say to that? What's your own view?
Yeah, I think Ethereum was what really caused the split between proof of work and proof of stake to probably be the greatest split between two camps in the crypto industry, right?
Yeah.
Transitioning from proof of work to proof of stake, the second largest cryptocurrency in the world, making that transition, right?
Yep.
So that caused a very large scale debate as to what is greater, proof of work or proof of stake. And it goes back to this whole trilemma that if you move to one, it has issues with the other aspects of solving this great trilemma, right? And I think a lot of
Scalability.
times
Yeah.
people harp on that way too often. But either way, I think you have a valid point. And one of the things that I do like about proof of work over proof of stake, one, it seems a lot more agnostic. When you look at proof of work, it kind of feels like it's how everything started, right? If Bitcoin started off as proof of stake, I think we'd have an entirely different industry.
Oh yeah,
I don't think we'd
absolutely.
have. Yeah, I
Yeah.
don't think crypto would be crypto if Bitcoin was simply proof of stake.
Yep.
Um, and I think there's a aspect of effort that is required on proof of work that gives it a extra appeal, because anyone can buy some Solana, and I'm not picking on Solana, I'm just saying Solana. You buy some Solana, you go stake some Solana. Very simple. Anyone can do that, right?
Right.
But for me, being someone that likes to get my hands involved, get more involved,
Yep.
it's a lot more unique to be able to, even in the early days, right? Being able to set up a wallet, right? And very, very early on, being able to set up a wallet, be able to have a GPU set up to a specific pool, have certain things that not everybody can do, but you learn along that process. So I truly value proof of work more because it takes more to get involved in it. And I think everyone's going to have their argument of proof of stake, proof of work, which one's more decentralized. But in the end, you just look at Bitcoin, and I think that answers everyone's questions.
Yeah, I think this is a good transition into. I can share because you're hitting on some things that are making me think of a few things here. I can share with you what got me really interested in the Kaspa project. We can start taking a look at some charts here. And by the way, anything that you're touching on, if you have anything you want to share, feel free to share your screen.
Sure.
But for me, when you start talking about proof of work and getting your hands dirty and all that, when I first got into cryptocurrency, just taking myself back to, I mean, it's hard to believe. I mean, almost 7 years ago, reading about this stuff. Again, I'm a math guy. I'm a nerd. Okay, I'm a data guy, and
Right.
the idea that you could set up a computer and the way it worked, and I'm just going to speak in layman's terms for everybody here. The way it worked, I don't need to get all techie, is you have a bunch of computers solving a bunch of algorithms or mathematical formulas, and whichever one solved it first was rewarded a Bitcoin, right? And this was something that over time, okay, we have first off a fixed supply, which I love the idea of. The denominator is fixed, right? So your supply is fixed, and the reward, so how much Bitcoin you're actually getting rewarded from solving these computational problems, gets halved every 4 years. That supply just continues to become diminished over time, right? So deflationary. And so in just from that basic layman's terminology perspective, that is what I loved the concept of Bitcoin. And so the reason I got so excited about Kaspa is because when I actually read the white paper, I was reading this to myself and then learning about who was involved with the project, but just reading the white paper, I thought to myself for the first time, and it was the very first time that I got excited about a project from a fundamental perspective since Hedera Hashgraph, I thought to myself, this sounds like Bitcoin. I mean, this literally sounds like Bitcoin, but more efficient, right? More scalable. So that is what got me really excited about it. But I'll tell you the very first thing I did, and jump in, interrupt me if you'd like. But what the very first thing I did was what caught my attention. I saw some people talking about it on X, and it just seemed to be getting a lot of attention. I said, Kaspa, what is Kaspa? The first thing I did is I pulled up a chart, and I charted it, and I looked at it, and I thought to myself, and I can share my screen real quick here. Let's see here. I'm able to share my screen this time. We had a little bit of a clunker at the beginning there. But when I looked at this chart, I don't understand when you're looking at this chart. I mean, one of the most basic premises in technical analysis that you need to ask yourself when you're watching a chart, and we can take a look at a couple examples that are good and bad. We have a low here, we have a high here. We have a low here, we have a high here. I mean, you could get a kindergartner to point you out this, right? We have what's called higher highs and higher lows. Those are what I call the basic building blocks of a bullish narrative, okay? So if you have something that's opposite, and there are many projects that look like this, and this is another thing that was very attractive about the project, just by the very nature, it's a proof of work project. There was no ICO. It was fair launched. A lot of these projects that are ICO'd, they start up here and they come way down here, and then they start doing this. That's called a death spiral, okay? That's not an attractive chart, okay? And you have to look for bottoming signals to even consider getting it. So the very first thing I did was pull up the chart. I looked at the chart and I said, it looks beautiful. I need to read into what this project is. And so it wasn't until I started reading about the project that I got really excited. And I went from taking a small position to a much larger position over time because of my conviction in the project. And I'll pause here in a moment, but just to get your thoughts. But I remember I was so excited about this project. And again, this is coming from a guy who's been in this space. It sounds like we've been in this space for about the same period of time. I was leaving my brother audio messages on his phone just saying like, bro, you need to check this out. Like you need to read about this project. You know, just like I say to people on my YouTube channel, I'm not giving you financial advice. You need to do your own due diligence. The technicals first off look beautiful, and the fundamentals are something I haven't seen since, I mean, it just reminds me of Bitcoin. So you need to do your own homework here. Look into who's in charge of the project and everything from point A to point B on the fundamentals. But this thing looks solid. So I just had not been that excited about a project in a long time.
I think that's what a lot of people, right? A lot of people hadn't been as excited. It's been a while since there was anything that could have been ever compared to the likes of Bitcoin, right? And even to the point where Kaspa was fairly simple to understand, right?
Yeah,
If you got the book,
I have that
um,
audio
yeah.
version.
So
Yeah.
like
Yeah.
you read something like this, and you can get a better understanding of what the intent of Kaspa was about, And I think one of the things that a lot of people will try to compare it to the likes of Bitcoin because there is so much to compare, right? If you look at I'm going to jump over here and I'm going
Yeah,
to
go for it.
share my screen. Um, when you jump over here and you look at the likes of Kaspa's um, emission schedule, is it popping up?
Didn't pop up yet. I just stopped sharing my screen. Why don't you give it
Oh,
another?
hold on. Let me see if I can pop up. But I think Caspa's emission schedule is one of those things that makes people extremely excited. You can see it now. So when you look at Caspa's emission schedule, right, it's one of those
There we
things
go.
that gets a lot of people really, really excited. Is it popping up?
It is.
Here.
You're good. Yep.
Okay, there it is. Okay. So when you look at something like this, right? When you look at Caspa's, this is where Caspa, this is their entire mission schedule
Yep.
until the last Caspa is mined, right? So one of the things that a lot of people always harp on, and when it comes to Bitcoin, and when you look at Bitcoin's emission schedule, right? People a lot of times whole cycles of bull market, bear market for Bitcoin are a lot of times completely solely focused on the halvening cycle, right?
Yep.
The halving cycle is like the focal point of a lot of people, right? And so
Yes.
when you're looking at things from a technical analysis standpoint and you look at supply and demand, you're going to see the impact of that supply and demand directly impact the price action of that underlying asset. When I looked at this as far as Caspa, right now when you look at Bitcoin and the amount of Bitcoin that's already been mined, Caspa will match that level in about a year and a half. The amount of Caspa that will already be mined in a year and a half will almost be the same amount of Bitcoin that's already been mined, right? And a lot of people focus on that. And so when I look
And
at the
just to
potential for
just so the audience knows, just to take a step back, Alex, because some people may be
yeah,
less familiar, what you're showing is the fact that while Bitcoin has a halving cycle every 4 years, Caspa's halving actually takes place every month. That's what's
yeah,
going
so
on.
Caspa
Yep.
right, so Caspa has a reduction on a monthly scale of
Right.
rewards.
Right.
And when you look at the percentage, the a true halving when you have an impact of 50%, right? You go from 6.25 Bitcoin down to half of that, right? So when you look at the same perspective of 50% reduction, ASPA does that essentially every year, right? Instead of every 4 years, there's a 50% reduction in rewards every year.
Year.
So that makes it why it's 4 times greater than the likes of Bitcoin.
Right.
That's why the last Kaspa will be mined in 2037, not in 2140, right? So when you're looking at the
Yeah.
opportunity, you're looking at in the next 13 years, all of Kaspa is going to be mined. You're still going to be mining Bitcoin for the next, after this for another 100
Yeah,
years.
we're not going to be
You're still
alive.
able to
We're
mine Bitcoin.
not going to be alive, my friend. Maybe with AI, we actually will be. Who
Maybe,
knows?
maybe, right?
Maybe.
Maybe some AI will keep us alive for another 100 years. But like this, if you just looked at this, you look at price action in a chart, and you look at the fact that there's going to be no further supply to be mined in just over a decade, like that in and of itself is extremely bullish. I mean, you're looking at the fact that the amount of Caspa that is going to be shared, right? So the total Caspa per month that's going to be distributed between miners is going to be 37,412. That is almost next to nothing compared to where we are right now at where are we? 2024. We're looking at March 324 million.
Hmm.
Going from 324 million to what 40,000. That's insane to think about the supply and demand aspect, and that is going to directly be shown in the charts.
This, and this
And that
and this is an extremely important fundamental aspect of a project because I don't think enough people, more than likely, have a very firm understanding this, how important this side of a project is, what we call the tokenomics and the supply and how much supply and demand, basically. So if you pull up some of these things on CoinMarketCap and you take a look at some of these projects that either have again, some of these projects that were launched through an ICO and only 30% or 40% is distributed, or some of these that have unlimited supplies. Again, I'll put it to the audience like this: the United States dollar, just to use an example, one of the reasons that I love the concept of Bitcoin that really got me into this space. We have a fiat dollar, which means the government at will can devalue the currency by, essentially, the easiest way to think of it is printing dollar bills. It's the easiest way to think of it. So the denominator is infinity. So what that does is it devalues everything that is based on that currency. The same logic applies to a token. If you have an infinite supply of it, think about it. If you have 5 billion of something, isn't it going to be worth a lot less than if you have a fixed supply at 500 million? I mean, I don't think enough people consider that.
I think that's one of the things that a lot of times when you look at some things, right, and a lot of times you'll have projects that have a market cap of 50 million, but then like a fully diluted market cap of 20 billion, right?
Yep.
So that's an extreme, but like a lot of people don't realize and don't look at the fully diluted market cap in their decision making of the current market cap, right? So in a lot of ways, when you look at Bitcoin and you look at Kaspa, you're not going to be extremely diluted in the next couple of years, right? You've already got so much of that supply out there. There's a very, very limited amount that's still going to be left. And so you don't have to either one, consider what the full diluted value is or how much more can be printed, right? So that in and of itself, that's just a small part of tokenomics. A lot of times people will jump on, oh, this cryptocurrency is up 100% in the past month. I'm going to jump in. It's got a $20 million market cap. And they look at it and then they realize as token releases occur, right? That's one of the things with proof of stake as well, is like you also have a lot of times where tokens are allocated to founders or to investors, and token releases happen after 12 months of an ICO. Boom, there goes 20% of the circulating supply right on you as an investor or as a holder, right? So a lot of those things people don't think about until it actually happens to them. They're like, wow, why is the token dumping? Well, congratulations, all the investors just dumped on you. Right. You don't have that with Kaspa.
Right. And, you hit on something that's a really good transition point, probably without even realizing it. One of the things, and we were kind of speaking to some of this before we went live here, but a lot of people will, especially, I think you and I have both found within the crypto space. Let me share this. There we go. I think both of us have found within this crypto space that people tend to be very nearsighted and just they become very impatient. And so they see meme coins popping off. They see Pepe going crazy, dog with hat, all of these crazy things. And I kind of want to come back to that because I think there's an important point to be made on narratives that I wanted to hit on at some point. But the point is, when you're invested in a fundamentally sound project like this, and look, I mean, we're down 6% today, okay? So you look at something like this, and you're thinking to yourself, and hopefully I want to make sure this is being captured, because it looks like this is pausing. Hopefully this is not pausing. Hopefully, okay. What I'm showing here, and hopefully you can see my screen, Alex, I am showing a daily chart of Kaspa, okay? And you can see that on your end?
Yep.
Okay, perfect. So today it looks like we're down almost 6% today, and I can feel the frustration within the community regarding price. People are getting very, very salty, whereas as a technician, I look at the current price action, and while I've never I've never really seriously considered increasing my position because I feel like I think it's very important to remain diversified. So I'll just leave it at this. I feel very comfortable with the amount of Kaspa that I hold. When I see prices down here at 12 or 13 cents, I'm a lot more excited at buying here than I was all the way up here towards 18 or 19 cents. So really all that's happening right now, and I really implore people to do this, I think too many people within cryptocurrency are far too impatient in the near term and they don't zoom out. They miss the forest for the trees, right? It's very important to get up in your private jet, overlook the entire forest, and not be lost within the forest, okay? So I think a lot of people, and I think also a lot of people...
If you think about it, right, the saying goes, when in doubt, zoom out, right? When you look at the likes of Kaspa, right? It's up, and you look at this, because you can look at something like this is on a daily, right? If you zoomed in and you did like a 5-minute chart, everyone's going to look at a 5-minute, or even on the
2-hour,
right?
Here's a 2-hour chart.
Everyone's like, oh my gosh, Kaspa's dumping, it's the end of Kaspa, whatever it may be. But when you look at it and you look at it, the drawing, look at the chart on a daily basis. Kaspa from what it's charting right now on CoinMarketCap is up 70,000%. I'll let that sink in for some people. 70,000% is how far Kaspa's come, right? You look at this with you look at this with Bitcoin, right? And you and I were talking about this prior to the stream. A lot of people will look at Bitcoin. Bitcoin's all-time high in 2021 was 69,000, right?
Right.
And Bitcoin recently hit 74,000. And so as Bitcoin's come down over the last day or two, Bitcoin's at 67.4, 67.5. And people are freaking out. People are saying, oh my gosh, Bitcoin's dumping. It was at 73,000. You look at it from back a year or 2 years ago, people would have been freaking out about Bitcoin at this point hitting all-time highs. And it's just a lot of times people are very, very short-sighted. They're very nearsighted when it comes to the crypto space. A couple of reasons could be to that, but a lot of that is due to the fact that a lot of people getting in early within a lot of these projects that they think they get into crypto just for the memes, get into crypto because they want to make a quick buck, and they FOMO and they buy in, and they don't have the experience having been in the industry to know how cycles work or how processes work, how there's going to be corrections, right? And so a lot of times they don't have perspective. And I think perspective is, you see that in TA, perspective is absolutely key. And perspective is important in fundamentals. And I think if you don't have the right perspective, you're not going to see the forest full of trees.
100%, brother. I couldn't agree with you more. I think there are a lot of people that really try to get in it and make a quick buck. And the other thing, kind of piggybacking off of that, is I think there's a reason that there's an expression of herd mentality, right? I think a lot of people, what happens is they get super emotional during this time period, and all they want to do is buy Bitcoin. They want to buy Bitcoin here, but because they can't properly read a chart, and it doesn't even have to be high level, nobody's buying Bitcoin here. No one is buying it here. And one of the things I shared with you prior to the live stream is, we hit almost 74. Maybe we did hit 74, just about 74. But you don't care if we're at 67 or 68 or 69 if you're buying 22,000 or under. If you're buying 22,000 or under, you could give two shits less because you're up over 3x on your investment. But that's not most people. I think the other thing is you have a lot of people on X or Twitter. I still call it Twitter. I cannot get used to this.
Me neither.
You have a lot of people on Twitter that are reading content on Twitter, and they're also watching content on YouTube, and they're not putting it in the proper context. There's a lot of content out there where it's either because I would view you as an educator. I would view myself as an educator. We're not influencers. There's a lot of influencers who put content out there to grab your attention, right? And there are also content creators that are hyper focused of what we just said. They're traders. So, you tune into their stream or whatever, and they're like, okay, Bitcoin on the 30-minute is in a falling wedge here. We might break up. This is not the perspective that the average person should have. This is not. This is the perspective that someone should have. And the fact that right now, all Bitcoin is doing, this is so, it's obvious to me as a chartist, all Bitcoin is doing is in a parabola, and right now it's cooling off. It's cooling off. If I had to give you my high level observation of what's going on in price action, which I just spoke to yesterday on my live stream, Bitcoin is cooling off. We have to allow the weekly candlestick to print, and we want to allow the monthly candlestick to print. But depending how those higher time frame candlesticks print, they're going to tell us with a higher degree of higher degree of probabilities or likelihood here of what we can expect over the course of the next couple months. There's really only two main scenarios I see. We're either going to have several weeks where we're going to consolidate and go sideways, which is not a bad thing. It allows what are called the price indicators down here to just cool off a bit so we don't get too overheated. So there's either going to be a period of consolidation, which also increases the likelihood we'll have a higher blow off top, or we're going to be much, much higher by next week. And this is all going to be one big shakeout, and you're going to see Bitcoin up at $80,000. Close to, if not $80,000, by as early as next week before we see a little bit of a steeper correction here. We just have to allow the charts to play out, but too many people are getting way too emotional about what's going on in the market.
And I think a lot of times because people that get emotional get FOMO because they see things on social media. And a lot of times, like you said, right, a lot of your influencers in the crypto space are extremely flashy, right? They drive the certain cars, they have the certain brands, they have certain looks, and their only thing is Bitcoin's going to all-time highs, Bitcoin's going doing this, Bitcoin's doing that. So it gets people emotionally involved. There's some that don't do that. There are some that do. And when you get emotionally involved, you take the fundamentals out of it and you get emotionally invested. And then when you're emotionally invested, you're also to the upside, you're going to also be emotionally invested to the downside. And when you do that, that's when people on days like this sell instead of buying, right? And so when I think you have to, this is one of the things that, why I like fundamentals, because in fundamentals, I can take emotions out of it much easier than when I'm trading, right? If I have an open trade on something that I bought, a couple of days ago, because I think it's going to, for any reason, it's going to go up and I have a short-term mindset on it, I'm going to be looking at my phone to see where's the price action on this, right? Am I down 20% on my 5X long, right? There's that kind of perspective. This is why you see a lot of people who are trade futures that are over leveraged, like emotionally evolved because they either lose or win based on what a weekly looks like.
Yeah,
right? They're not there for the long term, right? And that's why when you look at Kaspa, having mined Kaspa at 0.2 of a penny, I'm not emotionally impacted by Kaspa being down 5% today. So you have to look at it from a perspective, and every individual has their own perspective. They have their own reasons. But when you look at something like this, it gives individuals a perspective that they can then solidify their position or their decisioning on getting involved in something, right? Because even if you're looking at this and you're just finding about Bitcoin for the very first time, and you've never heard of Bitcoin, you're just getting in, and you see a $67,300 Bitcoin, and you can have a fundamental perspective, and then you can have a TA perspective. If I'm looking at this from a TA perspective and I just buy Bitcoin today, I can also look at it to see, hey, what's going to be happening over the next couple of weeks? And then I have that, and then I have my reasoning as to why I get in now from a fundamentals perspective, right? You see the fact that a lot of ETFs are buying 10 or 20 times more than the Bitcoin being produced. You can have both of those solidify your position. And when days happen like this, you can go back to your two reasons, your fundamentals and your TA, and say, this is why I bought, this is why I'm sticking it out, and this is why I'm hodling. I think there's a clear reasoning why A is extremely important to solidify your reasoning behind taking a position, buying a cryptocurrency, whatever it may be. But I think it's one of those things that if fundamentals doesn't convince you, look at the technical analysis and say, okay, I'm good. And I think that is huge, huge.
Yeah, and this is where I think the synergy can be combined between fundamentals and technicals because I know for myself, so the whole reason I watch, I mean the whole reason I'm subscribed to your channel, the whole reason I'm excited when you put out a video and I'm like, "Oh, I'm curious what Alex has to say here," is because I lean on you in terms of what your view is on a project from a fundamental perspective to gauge, hey, maybe I should look into this or not, right? So at least I want to have some level of conviction. So the way I approach an investment, um, if I want to get into a trade, like what I would consider a trade, and we talked about this before we went live, 95% of my portfolio is invested. And I can explain how I make that decision. Trading is like 5%, where I literally just look at a chart and I'm like, wow, this is a really attractive setup. I don't really care what the narrative is or what the fundamentals are. Fundamentals, schmundamentals, as some people would say. I'm getting in for a trade, you know? Now,
Right.
if I'm actually putting material money in, I need to know about the project. I want to know fundamental. A lot of the things you spoke to are the things I will look into to establish whether or not I'm putting real money into that project. I think the only other thing that we haven't spoken about that I do consider and something I've more considered within the past year or two that I think would benefit people in the space, in my opinion, understand what the narrative is. So what people are gravitating towards, and I'll give you an example. Years ago, I never would have considered getting into a meme coin. You better believe a part of my portfolio is in meme coins. You better believe it because I understand social tokens, meme coins. There are material dollars flowing in there, but where technical analysis benefits me is I can pull up a chart and not buy into this. I'm not buying into this. I'll look at a chart. Now, this is Kaspa's chart. I'll look at a chart like this on a weekly and I'll say, look, again, a kindergartner could come on here and tell you what to look for. Anytime we've gravitated towards this blue line, it has been a massive buying opportunity. We actually went well below it here, but anytime we gravitate towards this blue line, it's just a 10 simple moving average on the weekly.
Right.
In fact, we're there right now. I'm just going to wait for prices to pull back to there, and I'm going to start scaling in at those levels. This is where technical analysis can aid you. Even if you're, and that's what I did for Kaspa when I had come to the conclusion that I wanted to invest more heavily into this project and not just look at the chart. I pulled up these charts and I evaluated them and said, are there any patterns present? Are there any key price levels that make sense that we're pulling back to? And let me know if that makes sense. But I can, if you want, I can kind of touch on just current price action. What's going on with the current price action, if you'd like?
Yeah, I think DCA is probably one of the best strategies, right? But
Absolutely.
there's an aspect to DCA to best optimize your DCA, right? Your dollar cost averaging. And I think for a lot of people, when you look at, there's going to be some people that, who said it? Time in the market is better than time in the market, right? But there's always a
Say
perspective.
that
I think it
again.
was Warren Buffett. Time in the market is better than timing the market. I think it's said by Warren Buffett.
Okay.
But I think there's a perspective that when you're looking at when you look at cryptocurrency, like when you look at Kaspa, right? You look at historical. Oftentimes, the best decision when it comes to cryptocurrencies is looking at the historical data to make a futuristic decision, right? You're making the decision today because of what happened in the past.
Correct.
So when you look at the saying that history doesn't repeat itself, but it oftentimes rhymes, look at that from a fundamental perspective, but you also look at that from a perspective. So take, for example, Bitcoin, right? Bitcoin historically, leading up to its halving, has pumped. And there's going to be a lot of volatility when the halving occurs. Typically, 3 to 6 months after a halving, you see a ton of price action. You can look at that from a fundamental perspective because of your historical experience. You've been in the industry when Bitcoin was, when Bitcoin was at 3,500 when it dumped in 2020 because of everything that was happening, right? But you also look at how cycles work. You can take the history and you can have that make your decision for how you get involved. But you can also do the same thing from a technical analysis. For example, in this case, Kaspa, every time it drops below that line, you can see it's dropped below that line 5 times. And after it dropped below those lines 5 times, what did it do? It pumped.
Right.
You can take the historical experience, make futuristic decisions, both from fundamental and TA perspectives. And I think that is absolutely key because when you're looking at, for example, if you may be happy with your bag of Casper, right? But let's just say I wanted to add to my bag and I wanted to get the best price possible because that's how you're going to get your best returns. Best price possible isn't just buying today because it's a down day, but looking at the charts and saying, okay, so historically, the last 5 times when things went down, it maybe went down for another 1 to 2 weeks. This would be the ideal time to buy, right? So you strategize your DCA's position and your perspective and your involvement based on historical data, TA and fundamentals alike.
That is such a logical way to look at it. And the only thing I would add on top of it, and I know you're thinking of this, but just to even further refine it and increase the precision of what you're saying, all of that DCAing in is subjective based on your own risk tolerance levels, right? So based on how aggressive or how conservative you want to be in scaling in, we could look at a low time frame like this, like a 2-day chart, and you might say, well, if we pull back anywhere in between, what is this? 14.8 cents and 16, I'm buying in. I'm gonna, like a third of whatever I want to buy is going to be in here. And if we break 14.8 and we're in between 13 and 8, I'm putting another third in it. If we get some sort of a capitulation wick and go down here, I'm putting, So it all depends on, or somebody might want to be more aggressive and say, look, we're at 14.8 cents. I'm going to be buying in here. I mean, I know for myself, I looked at this chart and normally I don't post out specific trades that I do or swapping positions, and I don't swap investment positions, but I had intentionally put in a trade position in Doge, and I had it sitting there for a while. And finally, it appreciated to the point it was up near 20 cents. And I said, well, and Kaspa was down at 15.8. And I said, I'm swapping some Doge out for Kaspa. Because to me, looking at the charts, swapping out a 20-cent Doge for a 15.8 Kaspa made way too much sense to me. So, again, and I didn't even count on accumulating any more Kaspa. I was not counting on that one bit. But I think you're laying out a very, very, very logical way to approach it, which is, again, falling back on the idea that, fundamentals and technicals, like you can use these things in tandem to make very smart investment decisions. I mean, if I had to share with you kind of what's going on with price today, just very briefly sharing with you a perspective on what I see in the chart. I always, when I'm assessing a chart here, one of the things that I really preach on my channel is to keep it stupid simple. In fact, one of the things, actually, Alex, I'll share with you, I'm going to publish a video next week. I would invite you to take a look at it. I'm going to be putting together a very simple video. I should get done publishing it actually this weekend, of just there's just going to be 5 topping signals to tell me, hey, these are statistical measures. All 5 are signaling, and this means it would probably be a good time to start selling your Bitcoin. Because my view is we're nearing that euphoria stage, and we're gonna have a major correction. So you may want to consider taking some profits. So I'd look out for that, because it's just using statistics. That's all it is, and it's all about probabilities. But anyway, when I'm assessing what's going on in the chart here, I always use green lines for support and red lines for resistance. Okay, so the first thing I'm seeing, and I like looking at moving averages too. We're going to take off the 200 so this scales better. But the first thing to notice is we're in a general downtrend. I mean, we have a high, we got a low, we got a high, we got a low. We keep bouncing, but these are the basic building blocks of a bearish narrative. So we're definitely getting some consolidation. We're having a corrective manner forming within Kaspa. So the question we have to ask ourselves is, first off, where can we expect price to stabilize? Well, I would anticipate price to stabilize no deeper than 12 cents. I do not anticipate price, again, what we refer to as wicks. So when a wick comes in on a candlestick, you can get a wick that comes down here. That's volatility.
Right.
But the candle bodies, I do not anticipate going below 12 cents. If we start to go below 12 cents, it strongly increases the likelihood that we're coming all the way back down into this area. It's something we don't want to see because we spent literally almost 2 months consolidating in this area before we had a major move up, right? So my main area, kind of looking at the chart and doing some TA, and feel free to interrupt me if you have any questions or this isn't making sense.
Very good.
But 12.1 cents, that's the major thing. And what I also like to see about this chart is anytime price action is above a moving average, it acts as support. Anytime it's below it, it acts as resistance. So if we just focus on the 50 simple moving average on the 2-day, I like using the 2-day. Now again, not a lot of historical price data on Kaspa. So zooming out and looking at a 2-month chart is not going to provide a lot of good historical context. So even though this is a lower time frame, it's still very valuable. So for me, what I'd like to do is I just want to stabilize in this price area because now the bigger picture is a low, a high, a higher low, a higher high, higher low, higher high, higher low. I just don't want to come back down here. I don't want to negate all of that bullish momentum we saw the past couple months breaking up towards almost 20 cents. Now, once we stabilize in here, the other quick thing I'll say is we need to take out the descending resistance, right? There's a clear area of descending resistance here. So price will start to express strength if it can stabilize in here and start to do one of these things and get the higher highs and the higher lows coming in. And the last thing I'll comment on is as that happens, you're going to find these price indicators begin to stabilize themselves and the momentum will begin to shift up. You'll see it in your stochastic RSI, your relative strength index, your MACD. Those are the things to be watching for in price.
I think it's one of those things, when I look at something like this, right, not being a TA guy, right, it makes sense, right? And so oftentimes when you're trying to make sense of something, looking at something like this gives you it gives you an emotional out. Does that make sense?
What do you mean by that, actually? I'm not sure.
It gives you a reason not to be emotional.
Oh, okay. I got you. No, I understand. Yep.
Yeah. So you look at something like this, and you could get extremely emotional by the fact that Kaspa went from 18 cents to 13 cents. But if I can have TA to tell me from an emotional perspective, this all makes sense. That it's almost programmed, not to say it's programmed, but it's almost programmed to do something like this. I can breathe a sigh of relief. I can say, this kind of makes sense, right? So it's an out to get from an emotional state to sell or to have paper hands, whatever terminology you want to use.
Yeah, because I guess yeah, because you're making a lot of sense. I mean, I guess the question I would ask for someone who, like, if someone isn't, even if you have a fundamental, I mean, and you hit on this. So if you have conviction, fundamental conviction in something, right? But you're seeing the price for, let's see, a month. For a month, all it's been doing, and it sort of tricked you out here. We had one day here where we went up and we thought we were going to be, going back up and we didn't, right? So if price has essentially been going down for a month, if you don't have the ability, just the basics, nothing crazy, but just the basics to be able to read a chart, I can see why it could still get you a little emotional, right? But if you have that second aspect beyond the fundamentals to be able to look at a chart and say, okay, well, here's what's going on, and This is the reason not to be like, even if there's a little part of you that's emotional, even if you've been at it since 2/10 of a penny, and it doesn't concern you, still, if you got in later, like myself, my average entry is 3.5 cents. I'm still up nice, but
Right.
Still not 2/10 of a penny. I would love to be in your shoes, Alex. But this does give you a little bit more firm footing. And I think one of the last things, and I'm curious to get your perspective on this, one of the other things that maybe the last thing I want to comment on this chart it made me think of is, I think another reason people get salty about TA is, and maybe they're just listening or watching the wrong person, or they just don't have the right viewpoint. I think a lot of people listen to technical analysts and they take it as a certainty. And if we try to, for one moment, think about that statement and what it means, and we're all logical people here, think about how nonsensical that is. There is literally nothing in life that is certain beyond living and dying. That is it. That is the only certainty. You're born into this world and then you die someday. Those are the only certainties. Charting, to your point, and you made this point very well, is all about probabilities. We look left at historical data to make inferences about probabilities moving forward. That's all it is.
Yeah. Yeah, I think that's a lot of times, right? You look at the thing with even from a fundamental perspective, right? You talk about a crypto project because you look at it from a fundamental perspective. Like, for example, AI projects are extremely hot. Talk about AI project, it pumps, and people are like, "Oh my gosh, it pumped!" Right? And then all of a sudden, there's a market correction, and everyone comes back to you and says, "Hey, you talk to me about this crypto project," and all of a sudden it's down.
Yeah.
All of a sudden, I'm upside down in my involvement. And they did it from a fundamental perspective, right? They didn't even do it from a TA perspective. They just heard, "Oh, this is going to be the future. This project's going to be really good." I get in. They don't look at the price action. They just get in. They look at it from a long-term perspective, and they're like, "Oh, I'm so pumped." And then they look back at you and say, "Why'd you tell me about this? I'm down in my investment in this project, and like I thought it was going to go to the moon." And the same thing happens with TA, right? People are like, "Okay, so I get in once this bounces at this point," but nothing is perfect. Yes, the historical, you can see history oftentimes in it. This happens from a fundamental aspect, happens from a technical aspect. History is not going to repeat itself exactly, but it's oftentimes going to rhyme. You look at that Kaspa chart, every time Kaspa broke out, it was not the same exact green candle. It was not the same exact point that it hit on the simple moving average.
Yep.
It wasn't the exact same, but it was extremely similar. And you can take that, and you can take the experience, and you can take the historical data to make reasonable expectations of what can happen in the future.
Yep.
And I think a lot of times people get extremely unreasonable and think that just because it happened this way, it's always going to happen this way. There's going to be some slight nuances, and you have to be extremely fluid to be able to ride with that for sure.
I agree, and it's very hard. Just like it's very hard to find, it's just in so many pockets of this industry. There are sharks and there are people out there genuinely looking to help you. If you think about it, when you're investigating a project and you're looking at the founders, like you never know. Like, you do your due diligence, but like you said, sometimes that oddball comes up, that blue herring, where it's just the one that you felt so sure on something, but something doesn't go right. It's the same thing with, technical analysis. There's a lot of people who call themselves technical analysts out there who are the most nonsensical, illogical people, and you have people listening to them. They'll do something. They'll do something with a chart. They'll do something with a chart like this. Like, they'll take a look at a Kaspa chart, and not to pick on a community. I'm not going to do that, but I think it's pretty well known within the crypto industry. the XRP community is very, there's so many people in that community that for whatever reason they're like fractal boys. They'll take a bars pattern and they'll do this, and they're like, well, this is what Kaspa is going to do over the course of the next couple years. And so as you can see, Kaspa is going to be up at $42 by 2025. And it's like, man, that's not technical analysis. Like a kindergartner could do that. It takes no education to do that, right? So it's just hard to find really good people in the space in general as well.
I think a lot of times people will weaponize technical analysis. They'll also weaponize fundamental analysis
Yep.
to fit their narrative, right? And in the end, is not all the time, not with every person, but that person is doing it to benefit themselves, right? To pump their own bags, if you will, or there's something that there's a false sense of hopium, right? If I was to go on, because I'm extremely reasonable on my price, on where I think Kaspa can be in the future, right? I could go out there and I could create a video and say Kaspa is going to go to $25, and I can make a chart look a certain way to make it make sense, to make it fit my narrative. But just because it's my narrative doesn't make it reasonable or logical by any means. And so you're going to have people, I think there's extremes to both ends, right? You have Kathy Wood that say that Bitcoin's going to $1 million, right? Well, let's be reasonable about it. Could it go to $1 million? Sure, but like where is it actually headed, right? I can say Kaspa is going to $100 in a year from now, but where's the proof? Where's some TA and where's some fundamentals to make that make sense, right? And so I think for a lot of times, influencers will make certain things look certain ways to fit their own personal narrative, to one way or another, oftentimes not only take advantage of the community, but also to enrich themselves. Not everybody is like that, but you definitely have to watch out for some.
I agree, and I always say on my channel that to your point, could Bitcoin someday hit $1 million? Yeah, I think it's possible, but how about we try living in the present and ask what's realistic over the realistic expectations over the course of the next couple years, in the next year or two.
Sure.
Because $1 million is not coming in the next year or two. Like, let's just try to have a shred of dignity and common sense. But one of the other things I was thinking of as we were talking is I have this live stream and it's called All in the Charts, and I very, 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 very routinely reiterate, literally, I think everything is all in the charts. But I don't want people to confuse or think for one moment that I don't consider fundamentals. Something you spoke about, and I'm not sure if you're familiar with it, but if you're not, definitely look it up. I don't know if you study anything that Raoul Paul puts out there about the everything code, if you're familiar with that at all.
I don't think so. I know who Raoul Paul is, though, but I don't think everything.
Look into the everything code, because one of the things that I'm considering is if you take a look at and you study, because I find the fundamentals very interesting, everything from cryptocurrencies to just the economy in general. I've had a lot of thoughts about someday maybe my channel breaches out beyond cryptocurrencies and I kind of delve into some things in the economy. But what he basically hits on is there are liquidity cycles and interest rate cycles. And the interesting thing about this is the interest rate or liquidity cycles that are roughly 3.5 years, they sort of line up with the Bitcoin halving. So don't know how coincidental that is. But the reality is, for me, in terms of my perspective of the markets, just to further highlight that I do consider fundamentals, I have this purely technical TA-driven view that Bitcoin is going to have a blow-off top a lot sooner than people think within the first half of this year, based on a broader Elliott wave that is present within the chart. However, I am very, 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 very open to being very incorrect, and we do not have a blow-off top until late 24, early 25, based on these liquidity and interest rate cycles. So I definitely do consider the fundamentals for sure.
Yeah, I mean, even if you look at, because one of the things when I was talking about Bitcoin maybe I don't know, a year and a half ago. And historically, Bitcoin leading up to its halving, right? Bitcoin, if I'm correct and I may be wrong about this, but I think historically Bitcoin's never surpassed its prior all-time high before its next halving.
Correct.
I don't think that's ever happened
Never
before in the history of
happened.
Bitcoin.
Nope.
So that's why there's the saying that history doesn't always repeat itself, but sometimes it rhymes. But there's oftentimes macro factors, and I think you're alluding to that to a certain degree.
Hmm.
Macro factors, there's always going to be something that's outside of TA. There's something outside of fundamentals that can always have an impact. You have to always be open-minded to something like that, right? ETFs, for a lot of people, oh, they're priced in, right? A lot of people have that perspective that ETFs were already priced in. And historically, if Bitcoin had followed its pattern of being about 50 to 60% of its prior all-time high leading up to the day of the halving, that means Bitcoin would have been around 40 to 45,000 at the high,
Hmm.
potentially more likely 35 to 40,000 leading up to its halving in about 30 days, right? Historically, look at all history, that would have been reasonable. But there's oftentimes macro factors, ETFs, the amount of Bitcoin that they're buying, making that no longer the case. And so I think you always have to, just like you said yourself, the interest rate and the cycle of interest rates, something like that, you have to take into account when you're making your decisions.
Absolutely.
And I think it's something a lot of people forget, and it's something you always have to account for.
And you hit on something else there too that made me think to point this out. This is very, I think this is very difficult for people to, it took me a while to get around to have this philosophy. And I know this doesn't hit a lot of people well, and it doesn't make sense or resonate at first, but it's at least something to think on. And what I mean is, routinely on my channel, something I speak to is the news follows the charts, not the other way around. The charts don't follow the news. And so what's baked into that statement is essentially when you look at a chart, everything, the human emotions, the news, people front running the market. There's a popular narrative out there that now everyone knows is going to happen, like a 4-year cycle, and it doesn't happen. All of that stuff is baked into the price data. I know it seems a little bit counterintuitive, but that's the way that I assess the market.
Yeah, I think, oftentimes news is always a little bit late, right?
Yep.
Almost always is a little late to the game. So that's why a lot of times, by the time that people actually hear about it, they've already missed a lot of the opportunity. And so I think there's always going to be different perspectives based on what is publicized on the news side of things. But I think in the end of it, what we're looking at is every year you're also going to have a something that drives adoption and price action. I think the last cycle, it was a lot of venture capital, right? You saw a lot of venture capital coming in. The cycle before that, you saw a lot of ICOs, IDOs, kind of what some of the charts pumped to $20 million that they raised, and then the chart is dumped. I think this year the narrative to a certain degree is ETFs, and I think the price action of Bitcoin happened and pumped a lot more before the news actually caught on to what was happening. And I think that will only continue further in this cycle.
Yeah, and I think something to be weary of and to really be on guard against as you bring up the ETF narrative. What will happen, I feel, with a very high degree of conviction, what will happen is once Bitcoin resumes its uptrend and we're in that $80,000-$90,000 mark, you will be hearing about a super cycle. You will be hearing about Bitcoin will never have a big correction again. The ETFs just won't allow it to happen. Bitcoin to $300,000. That is when you really need to be on your guard because, again, to your point, you made this earlier, history doesn't repeat, but it often rhymes. And so when I assess this chart real quick here, when I look at this chart, pull this bad boy up. All right. So when I'm looking at this chart, and in generalities, again, just kind of zooming out here. And actually, I want to look at this on a monthly, because a weekly, there's so much Bitcoin price data. We can actually go a little bit. Yeah, let's look at a monthly chart. So when I look at this, and again, I'm sort of painting my expectation when we're going to top, but in generalities, what has happened? Well, when we've reached a blow off top, and again, this is, I mean, you guys can look at the chart here. This is from 2012 to 2024. So we can only go based off of 12 years of price data, which on the one hand is the most price data we have for any cryptocurrency project in the space. On the other hand, it's still not a ton of price data, historically speaking, relative to other assets. But when you look here, you see an 87% correction. You look here, and you see again, more than an 80% correction. And we could, maybe for another live stream, we can save this for a different live stream. But if you're unfamiliar with my viewpoint, this, from a TA perspective, was our impulsive top. This whole thing was a correction, believe it or not. From an Elliott wave principle perspective, this is an ABC correction. So even though we went up to 69,000, it was part of a corrective structure. But anyway, we corrected down from 69,000 all the way down to here. So we had a near, so until we stop having these 78 to 85% corrections or 87% corrections, there's nothing in this chart, and there's nothing in any other chart. You could go to any other technology stock, which Bitcoin often gets compared to. You can go to any other chart, and during those periods where people are saying this time is different, like these people are in, or for whatever reason this time is different, chances are if you're not in a bubble, you're about to be in one, and we're going to undergo the similar correction. The same thing's going to happen.
I think, you're looking at this, right? The perspective of what people were thinking when Bitcoin was at 17,000, right?
Yep.
Or what was the low for Bitcoin, right? What was that 16.5 was like the real low of this recent market, or about on a daily, right? You got down to, in November of 22, you got down to 15.8, right?
Oh, you're going, wait, where are we going back to here?
Back to 2022. So when
2022, we were at like 15.8, I think.
15.8, right?
15.4, sorry, 15.4, yeah.
15.4.
Yeah.
So when you look at where were people's minds in November of 2022, everyone's like, Bitcoin is going down to 10K. It's going down below, it's going down below 10K. You had so much noise that was out there. Right? In November of 2022 is when I started my crypto mining company. So of all times that you could have started a mining company, a crypto mining company, that, in a lot of people's perspectives, was the worst time ever you try to start a crypto mining company.
You've got some balls, son.
I mean, everyone was like, what are you doing? Like, what if Bitcoin, like the question a lot of people asked was, what if Bitcoin goes down below 10K?
Yeah.
Okay, what if it does? What if, And really, there wasn't something to the degree that was, okay, if it goes down there, well, how long is it going to stay down there? Is it going to stay down there forever? No, it's not going to stay down there forever. So when the perspective that a lot of people were freaking out as to, when would be the point that you go belly up, it wasn't that perspective. The perspective was timing. And I knew, historically speaking, every time Bitcoin dropped, based on its cycles, would drop around 80%, 75 to 80% is usually the bottom of the market, right? So Bitcoin could have gone down a little bit more, but that it is what it is. But from a timing perspective, starting a company at the bottom of Bitcoin, probably one of the best decisions I've ever made. That said, could Bitcoin have gone down to 15.2? Could it have gone down to 14.5? Sure. But no one is going to complain about the fact that if you bought Bitcoin at November of 2022 with Bitcoin down 80%, 75%, whatever it was, you got a perfect entry leading into the following year. So I think the perspective a lot of times people have is they're so caught up in the here and now, and you have to have a long-term mindset. And the same thing with Bitcoin, right? You're looking at where it is right now. Everyone was telling you to buy when Bitcoin was at 68, 69,000. Everyone was saying the super cycle thing. That's what Luna was it Luna that got in trouble. The one of the founders behind Luna was this big proponent of a super cycle and Bitcoin's never going to correct.
Oh,
And
did
you
he
see
really?
what happened, huh?
Did he really say that? I mean, before all the
I believe so.
shit went down? Really?
I believe one of the co-founders of Luna is was it Dokwon?
Oh,
Or no, no,
well,
no, no,
Do is the founder, yeah.
not it was Three Arrows Capital.
Oh,
One
Three
of
Hours
the
Capital.
guys behind Three Arrows Capital said
Yeah.
Bitcoin's going to have this super cycle and it's never going to get down. Right? You look at where Three Arrows Capital is today; it's not existent.
Right.
So when you look at the perspective, historically speaking, you look at things and you have to look at it when in doubt, zoom out. And that was the same exact thing. When people are telling you to buy Bitcoin, you should have been following those people who were telling you to buy Bitcoin when it was at 16, 17,000. When you see that it's down, when everyone is fearful, that's when you're greedy. When everyone's greedy, that's when you're fearful. And we're getting to that point. You look at the greed and fear index, right? You're at in the 90s at this point. Yes, we were starting to hit that one in the last cycle. Bitcoin went to 40K, when it 50K, when it went to 60K, when it went to 68, 69. You have to realize we're starting early in the cycle a little bit, but you're going to be getting to that point where people are going to just tell you buy right now, and you're going to have those FOMO perspectives of
Yep.
a lot of people. Um, and when everyone's telling you to buy, that's when you should kind of dose yourself with a sense of reality and say, okay, step back and look at where things are. And TA can definitely do that.
Yeah, and I'm glad. Really good quick transition, because this is where TA can really benefit you, because as those emotional narratives come out, I think if you're well equipped to be able to have some basic knowledge of technical analysis, it can benefit you. And I'm just going to walk you very quickly through time to show you how TA has personally benefited me. So during this time, this was back in 2018, 19, when I had first gotten into the market. Now, the message that was being conveyed here, and I remember Tom Lee was coming out on CNBC and saying this. Tom Lee was coming out and saying, because we were hitting, I'll never forget this, 58 to 6200, this was expressing a high degree of strength within the chart. And I said to myself, no, actually, there's two things going on. First off, we have lower highs coming in, okay, and we have a flat base. This is what is known as a descending triangle. It's a very bearish pattern in charts. The second thing is, the more times you actually hit an area of price confluence, 58, 6200, the more times you hit it, especially after you get past three occurrences. Three occurrences is okay. Once you start getting past three, you have a severe, much higher likelihood of having that break down. Actually, what happens is your confluence gets weaker, whether we're talking about the upside or the downside. So I said to myself, I'm getting the hell out, and I think this thing is going to plummet, and we eventually did plummet all the way down to 3,100. So there is an area where TA definitely benefited me. And the second, and I'll tell you where it threw me for a loop, but the second area it benefited me was during the beer virus crash, because we crashed all the way down to this level here. My general view of the market was there was a broader Elliott wave formation forming in the chart. Maybe we can get into more conversation about this on a further live stream. But basically, we had this big impulsive wave movement up. We should have seen a wave 2 correction and another wave, an impulsive structure up within the chart to wave 3. The way an Elliott wave structure does not get invalidated is, as long as when the beer virus crash occurred, this wick, as long as it doesn't invalidate the low that was set down here at 3,100, we still have an Elliott wave. So I knew once I saw price retract as quickly as it did from the $3,800 or $3,700 level all the way back up here, I was a buyer. I was a big buyer of that market.
Right.
Chainlink at what? $1.80, $1.85, I think. Chainlink. And again, we had the same thing go on here. And the reason this threw me for a loop was because when we came up here, and one of the important things, and I know you can take this away from a fundamental perspective as well, when you make a mistake and you don't look at things, you miss something. Okay, and you make a mistake. There is a learning opportunity. So one of the things that I screwed up on was that I was not paying enough attention to what are called negative divergences on the RSI. So as the price, if I can quick pull this up, as we were all the way up here and we actually made a higher high, the relative strength index was just going down the whole way. The volume and the price was not very strong. If you went to on-chain metrics, you saw whales were distributing all the way up here, okay? So it should have led me to feel a little bit unsure that even though we were going higher here, what was really going on? Well, what ended up playing out was we only went 5% higher here, which is typical for what's called an expanded flat correction. So we had an A, a B, and a C correction. And I knew, again, Alex, that once we were down here and people were calling for 10,000, the reason I felt so convicted that that was not going to happen was because we were above 13,880. And why is that an important level from an Elliott wave structure? Because this is the top of wave one. And so long as this price doesn't invalidate this line, if it doesn't go at or below it, we still have a proper Elliott wave here. So in this $15,000, $16,000, $17,000 area, you better fucking believe I was buying because I knew that. But those emotions run high.
Yeah, and that's why, from an emotional standpoint, you have to take your emotions out of it, right? Because everyone emotionally was saying Bitcoin's going to zero, Bitcoin was going down, whether they believed it themselves or not, or they were trying to preach a certain narrative to get views. That's all really besides the point. But the people that were buying at those times were doing it either because they had technical analysis to validate their investment, like yourself, or they said, hey, Bitcoin is historically down 75 to 80%. Whether I buy in when it's down 77% down, when I buy in when it's 72% down, doesn't really matter. I'm buying it when it's low because I know from a historical standpoint, this is what's going to happen in the next 2 years, right? And there's, Plan B is one of those individuals on Twitter or on X, comes out with a video every now and again. But even with his chart, right, when you look at that rainbow chart, you can kind of see during times where how cycles work, the stock to flow chart, right? When you look at something like that, that's just an additional kind of additive to decision making that if you had simply followed, and it's just a very simple. If you had simply followed the stock to flow, you would have timed your entrance into the market perfectly, almost perfectly. When you follow this TA opportunity, what you showed out on a chart, you would have timed the market almost perfectly, right? If you're buying in at those levels. And if you look at it from a fundamental perspective, because when Bitcoin's down, when it has an 80% or 75 to 80% correction, that's usually when the time to buy. Fundamentally, a halving is going to be coming up. There's just going to be a correction. Bitcoin's going to reach a certain point prior to its next halving. That gives you 3 separate reasons, 3 separate convictions as to why you should get in at the time that you get in. And I think having all 3 of those, your advantage is absolutely huge. And I think you need to have all 3 if you're really getting involved, because oftentimes this is people's money, right? A lot of times people forget because it's so easy in the crypto space to throw in $50 at something and hope it goes to $1,000. Like, you have to think about how hard oftentimes you work for your fiat money before you're getting involved. And a lot of times I've seen people lose almost everything because they didn't have one of those 3 things as a conviction to get involved in something. And you have to be very, very careful about it.
I love how you said fiat money. I say the same thing. I don't just say it's only people in the crypto space that say that. Nobody else says that.
Normies are like, US dollars or my cash, whatever it may be, right?
You wouldn't suspect this, but I real quick, just it's related. So I gave a presentation at work one year. It was very recent, actually, and the company I worked for at the time, great company, they afforded me the opportunity. We had these monthly meetings where they would rotate within the actuaries who was leading the meeting. and you would make up the agenda. So I was like, okay,
Right.
free reigns to make it up. I'm doing an entire presentation on inflation. And you wouldn't believe,
Yes.
I work in a niche space with very intelligent people. And there was one person in particular who reached out to me after the conversation about inflation. And she said, I've been meaning to talk about a financial advisor because I have so much money parked in a savings account. And I had spoken about how savers are losers, not the actual people are losers, but you're losing out your
Sure.
purchasing power, right? But you wouldn't believe
Yep.
people that just don't fundamentally understand this.
Yeah, I think a lot of times, like when the easiest way to illustrate it is that image of what the value of the dollar has been since like the 1900s, right?
Yep.
People are able to track how low the value of the dollar has been. And you see this also in the news, like all the time. You can see, oh, people don't see that $100,000 a year is no longer a middle class income, right? They don't. Majority of people don't see 100,000 as a middle class income. Look at that. I mean, I'm 25, so I'm not old by any means. But even
I got a few
when I
years on you there.
you got a few years on me, but like if I think about in like the early 2000s, 100,000 was like you're doing quite well for yourself. So even in
Yep.
the course of just 10 to 20 years before the iPhone came out, right? If you remember those days, a lot of people tuning in probably don't. But like before the iPhone came out and before a lot of this, a lot of the technology changes and a lot of things that have happened over the last 10, 15 years, 100,000 at that point was a lot of money. Now people are struggling to get by making 60, $70,000 a year, which was reasonable income at a certain time. So like you look at how things progress and the one of the reasons why a lot of investment companies are wanting to get into Bitcoin and why people talk about Bitcoin in general, and this is also the same case for Kaspa. Over the same time, that if you just take the last 5 years, last half a decade, what's appreciated more, Bitcoin or your fiat money? Right? It's a simple question, and it's a very simple answer, right? And it's not fiat money. So when you look at a lot of people get into crypto for a lot of different reasons, but when you look at Bitcoin and why Bitcoin's so strong and why Bitcoin's so powerful, and I think one of the reasons why Caspa is akin to the likes of Bitcoin is there's nothing in the world that's appreciated more in value over the last decade, ever since its inception, right? Nothing's appreciated more in value than Bitcoin, and that's why a lot of people get into Bitcoin because they're tired of seeing half a percentage interest on their savings account if you're lucky. So I think it's something a lot of people don't realize it, and that's why you have such a lot of the world that's still not even tapped into crypto.
Yeah, you made me think of something, and I'm just real curious if the same applies to you. Said people get into crypto for different reasons. You really are sort of, I guess, an OG if you can admit that, at least for me, on my ledger, I hold some tokens just for the nostalgia of holding the tokens, and I don't plan on selling them. Your Bitcoin Cash, your Dash, your Zcash, your XLM, your XRP, your Litecoin. I may or may not own Monero. I cannot reveal that information. But some of these
Right.
tokens I own, even though of all those charts, I think Ethereum Classic is the strongest. Of all those charts, even though I don't expect to make much fiat off of them based on the charts, I'm holding them for the pure nostalgia of it because I just love this space. That's how much I love this space.
Yeah, I mean, there's been those. I don't think I had a ledger back in 2017. I forgot. Back then, that was when it was early opened up on Robinhood to be able to buy certain cryptocurrencies.
Yep.
That was back when I think Ethereum was around $200.
Yep.
I remember correctly.
That
I'd have to
sounds
look
about
back.
right. Yeah.
Yeah, so like I remember when it was very, very early on where you could buy Ethereum Classic, when you could buy Doge on Robinhood for 1/10 of a penny, right?
Oh.
So like way
Yeah.
back in those
Yeah.
days when you
Yeah.
when you look at you didn't have a lot of these exchanges, you didn't have a lot of these things that exist today. But like if you look at it from when was that 2017? It was that was back when Ethereum was in the 40s. That's right. So in 2017, when I was looking at Ethereum was at $40 or $50, right? So and it went to about 400 in end of 2017. So, you know, going back then, right? That's such nostalgia from 7 years ago. How fast cryptocurrencies shift, how fast things change. Even if you think about it, right? Ethereum in 2019, in 2019 was at $100. So you look at where Ethereum is today, but like just think about 5 years ago, how fast things can move. And I think that's why a lot of people love crypto. And I know my dollar has moved as fast in the opposite direction
Yeah,
as,
exactly. Yeah.
as the likes of crypto.
Yeah, when I do very well for myself as well, given the space I'm in. But even when someone brings in the level of income I bring in, and he is starting to feel the impact of inflation, then it's getting a little bit unreal in terms of how much the dollar, the currency, is devaluing. It's the purchasing power. It's pretty crazy when everything around you is going up 20, 30%. Don't worry though, the CPI is only at 3%, and and you're
Yeah,
getting a 3.5% pay increase. It just yeah, it's pretty
right.
crazy. Um,
Yeah.
well, hey, I think this actually might be a good spot to sign out. But before we sign out, a couple things. First off, I know we talked offline, a good maybe way to end the segment, and something I'm really excited about to do with you at some point. Maybe we can look into next month. We'll figure it out. But I wanted to get into a little bit on ASIC miners, on Kaspa, and in particular something that I want to share with you guys tuning in here that I think will be really interesting to do, and I think will really create a lot of that synergy between fundamentals and technicals. Something we're going to look to do, and that should be really exciting, is taking a look at a few projects from a fundamental perspective, and then me throwing up the charts, and we can have an honest conversation about what do the technicals look like, and we can see which are the strongest projects being brought to the maybe we can have the audience vote as well. But
And
something I'm real excited to do at some point.
yeah, absolutely. And I think, um, I think one easy one is Core AI, right?
Oh yeah, yep.
You and I kind of go back a few, maybe a month or so, back on Core AI when I first talked about it on my channel, and I liked it from the fundamental perspective, and you loved it from the technical analysis opportunity. And I think that's one that we'll probably have on that list. But like looking at where if you look at where Core AI has come from,
It's in a
you
massive
know, I
cup
was
and handle, which I posted out there on Twitter, which is playing out. Yeah.
massive. But I mean, in the course of from when I was mining Core AI, it's gone from it's one of those that from inception has gone from 1 penny to over 40 cents. So it's one of those things that technical analysis could have definitely. I'd love to see technical analysis on how Core AI has played out, and also from a fundamental perspective, decentralized computing and graphics cards, NVIDIA, all of those are not only flashy, but it's also a narrative. It's also a need in the industry. You see the billions of dollars that's being invested into high graphics GPUs. It's something that fulfills a need. So you have all these other narratives. Look at the technical analysis. It's just a perfect storm in a lot of ways. So I'm really, really excited to also look at this from a technical analysis, look at some of these projects that can also bring in to get a different perspective.
Yeah, and I'm glad you brought up Core AI because I was hoping that would be one of the ones you would want to bring up
Oh
and
yeah.
talk about because I'm very excited about it as well. Beyond the technicals as well, but very excited about the technicals, and that's a project where it's a great example where, quite honestly, I hope I'm incorrect with my timing on when the blow off top occurs within the market because I want this market to continue to sustain itself going into 25. But we'll have to allow the charts to speak for themselves. But yes, I would be very excited to have you come back on here and cover a few projects from a fundamental and technical perspective. But before we sign out, beyond me expressing appreciation for you coming on here, I thought this was a great live stream. I wanted to point the audience to your content since it didn't come up the first time here. So you can find Alex here on X or Twitter right here at tacticalinvest_. And you can also find him on YouTube. And I am subscribed to his channel, as you can see. And then lastly, he does have this website that we spoke to earlier, which I thought he did a great job speaking to, Fraction Mining right here. So Alex, I just, again, wanted to thank you for coming on the live stream. I'm really excited about the prospect of just, continuing having you come on. And just having some discussions for you to share your fundamental perspective, my technical perspective, and hopefully the audience gains some value out of just seeing where there's value between the two and how you can combine them together to make a more well-informed decision from an investment perspective.
Yeah, absolutely. And I appreciate the invite. I knew I was pretty excited when you sent one to me, just because for me, I've never truly immersed myself in technical analysis. And for a lot of the things and a lot of reasons why I get into certain projects, I get in from a fundamental perspective. But looking at, like, if I wanted to add to my position in Kaspa to better enhance my entry position, right? Looking at the chart that you showed earlier in the stream, that would have been perfect. I'm looking at, this is ideally the entry point between here and here. This is the ideal time to get in. So I think there's so much value in TA, and a lot of times it's learning from the right people when it comes to technical analysis. So I'm not only excited to be an educator on the fundamentals, but also a student on the technical analysis. So I'm really pumped about our next live stream, be able to kind of showcase some different projects and go from there.
Sounds good, brother. Appreciate it. All right, guys. Well, until next time, we're going to sign out. Let's all spread awareness. Let's carry the education forward. Take care, everybody.
Awesome. See ya.
All right. So let me just say,